Hey everyone, welcome back. Just a quick sound check before we get started. I'm very excited for tonight's NFP number. We have seen a quite volatile day, especially today if you are trading gold. All right, a lot of interesting stuff happening this week as well. All right, audience, since we go on my side, we'll get started with our news trading session number 1. Obviously, this is the non-farm payroll. My name is Fidel Hinjero. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. We are expecting extra volatility tonight. And market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be very attentive when determining the volume of your transactions tonight and consider all possible risk factors. All right. So there are going to be bonuses for participants. Obviously, there's going to be a promo code that I'm going to show you to double your deposit bonus. And you should have access to the private Telegram channel if you're registered through email. And some of you that have attended this news trading sessions previously, you should already be part of that Telegram channel. All right, so this is the code for tonight. It's Nonfarm 2024. This is to double your deposit. So make sure you are using this code to get the bonus when you're depositing into your Octa trading accounts. All right, promo code is expiring on the 31st of December 2024. So you still have a good 6 months to go. All right. So yeah, before we get started, just a little bit about myself. My name is Vero Njoro, and I've been a full-time trader with over 20 years of experience. I've also been a professional trading coach and technical analyst since 2007 for several international brokers. I'm also an expert in Ichimoku Kinko Hyo technique, which is a Japanese trading methods. I'm also a director of Zenefix, an independent market consulting company. I've been the guest speaker at Trading Investing Expo across Australia, Invest Fair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Association and the Australian Professional Technical Analysts conferences. All right. So, as per usual, we are going to go through some of the basics. Some of you might be new here and interested in learning about what the NFP is, what's the whole big deal. We'll go through what it is. We'll talk about who the Bureau of Labor Statistics is, obviously, and we'll give you a little bit of a preview into what we are expecting. I think there was already a question just now in terms what do we anticipate for tonight. We are anticipating extreme volatility tonight and a lot to talk about the NFP numbers. All right. So let's start with the Bureau of Labor Statistics. So the BLS, or the Bureau of Labor Statistics, is a federal agency in the U.S. that collects and disseminates various data about the U.S. economy and the labor market. It also, its reports includes the CPI number, which is going to be released on the 12th of June, 2024, which is going to be next Wednesday, as well as the PPI numbers, both of which are considered important measures for inflation. Now, within the labor market data, the most interesting aspects are the number of people employed outside of agriculture. This is what we refer to as the non-farm payroll. And that's basically the main focus for tonight as well. Again, we're not just looking at the NFP number, we're also looking at the unemployment rate. So, in actuality, we don't call Friday the NFP Fridays, we actually call them the Labor Data Fridays, all right? So at the beginning of every year, the agency publishes a calendar with release dates for the entire year. So there's no excuse for you to say, oh, I didn't know about the NFP tonight, because all these numbers, all these data, they are, scheduled ahead of time, right? They release the schedule at the beginning of every year. Now, labor data is basically published every first Friday of the month, but if it falls on a holiday, publication is usually postponed to the following week and occasionally to the Thursday of that week. Typically, we see this during March, where we have a shorter February. Typically, we get the labor data on the second week, not the first Friday. All right. So, inflation data typically published on the following Wednesday, which is what we're going to get next Wednesday after the labor market data is released. So let's talk about what the NFP numbers are. The NFP is a report that's released monthly by the U.S. Bureau of Labor Statistics, or the BLS. that measures the number of jobs added or lost in the US economy, excluding farm-related jobs, private household employment, and non-profit organizations, okay? So if you're trading full-time, you're not going to be part of the NFP numbers, right? Or if you have your own business, your own private companies, they're not going to be part of the NFP that we're monitoring for tonight. Market analysts and investors usually look for NFP figures above 200,000 as is seen as a positive sign of a healthy job market and a growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and the context it is released in. And for tonight, we are going to be anticipating a number that's actually below 200,000. So we'll talk more about that in terms of what the numbers could be for tonight. And the NFP data, again, is a crucial indicator of the state of the US labor market and can significantly impact financial markets. A figure that falls below market expectations may be viewed negatively, while one that exceeds expectations may be viewed positively. As such, the NFP figures are closely watched by traders and investors, particularly in the forex market, right, where the currency pairs like the Euro USD, the dollar Japanese, and the dollar Canadian, and the pound USD tend to exhibit high volatility in response to the report release. Now, in terms of, how important is the labor market, right? In terms of importance, right, I think this would actually be one of the top three. In terms of scale, I would rank this the second, right? Labor market data would be the second most important thing in the forex market. I think number one, it's going to be interest rate decisions, then come the labor market, and then it will be the inflation rates. Okay, so those are going to be the three set of economic data that forex traders would consider them as, this is kind of like the top three events every single month that could happen, right? So it is very important. It is a big deal. Okay. So again, because it's so important, it's a special time for many traders who have learned to successfully use special non-farm strategies. We're going to share 4 strategies. We're going to be focusing on 2 tonight, which is going to be the straddle and the fade. We might be looking for the fade in terms of gold tonight, but every other thing, I think we're going to be looking at the straddle for tonight. Okay. Now, after every release, there are going to be strong changes in quotations of the currency pairs and even trend reversals. And again, during the release, algorithms of technical analysis basically stop working. So we need a separate strategy to trade these news releases. Now, according to the BLS, non-farm employee classifications account for approximately 80% of the US business sectors contributing to the GDP. Now, if you don't know what a GDP is, think of GDP as a price tag to the economy, right? If you really want to know if an economy is growing, is it weak, is it cheap, is it expensive, then we want to look at the GDP. And again, the NFP numbers here accounts for 80% of the potential contribution to the GDP numbers. So it is a big deal, right? And again, the best assets for non-farm tradings are the Euro USD, the dollar Japanese yen, dollar Swiss, Aussie USD, New Zealand USD, dollar Canadian, pound USD. Anything that has dollar on the pair that will be very important. At the same time, gold is going to be affected as well. We have seen a little bit of a non-reaction in the past 4 or 5 months in terms of gold movement in relation to the NFP. Things might change a little bit today because we had a huge drop in gold, and if you're wondering what it is, we'll talk more about it after the release of the data. There is actually a particular reason for the collapse in gold for today. Okay, now let's move on to the other set of data. This one here is going to be the unemployment rate. Okay, the unemployment rate is calculated in percentage, and it is published at the same time as the NFP numbers. Okay, the unemployment rate represents the proportion of the labor force that is currently not employed but is capable of being employed. And the US unemployment rate is actually determined through a survey of approximately 60,000 households and only 60,000 households across the United States of America. We know there are millions of people there, but they only took 60,000 as a sampling, but it does its job. It is a pretty good indication of what it is. Now, according to the U.S. Bureau of Labor Statistics, for an individual to be classified as unemployed, they must meet the following criteria. Number one, they must be without a job. Number two, they must be actively look for a job in the past 4 weeks. And number three, they must be available to start a job if offered one. Now, if a person doesn't meet this criteria, they're not considered unemployed for the purpose of calculating the unemployment rate. And for you to actually meet this criteria, number one, without a job, so the government needs to know that you're unemployed. Number two, the government needs to know that you're actually looking for a job. Number three, they could give you a job and you need to take the job, i.e., for you to actually be part of this 60,000 special people every single month, you would actually have to be on the unemployment benefits, okay? And that's basically what the initial jobless claims that we basically see every single week. We could use that as a little bit of a reference to what the unemployment rate is for tonight, but it is what it is. It's a sampling of 60,000, and you basically need to be on the unemployment benefits to actually be part of that 60,000. Now, the third set of data, it's the average hourly earnings, and this would actually be the third set of data that we look at, just in case if the NFP numbers and the unemployment rate are a little bit on the opposite side. Now, when we talk about the unemployment rate, let me go back here a little bit on the unemployment rate. For the NFP, the higher that number is, that means there are actually more people employed. But with the unemployment rate, for it to be positive, we want the unemployment rate to actually go down, right? So the logical thinking is for the US economy, or for the labor data to actually be good for the US dollar, you would need to see the NFP gain. At the same time, the unemployment rate needs to go down, right? If we have an increase in the NFP compared to the previous month, but we also have an increase in unemployment rate, that would be considered a mixed data. If we have a drop in the NFP number, but we also have a drop in unemployment rate, we would also consider that as a mixed data, okay? So you're not looking at, all right, I need both of them to be positive, right? You need one to be positive, you need one to be negative. So you need to have a positive NFP. You want to see a positive gain in the NFP numbers, and you want to see a drop in unemployment rate. And I know there are actually a lot of traders out there, and even coaches that teaches people to trade but don't understand fundamentals, and they got it wrong, okay? They would look at, the NFP gaining, unemployment rate gaining, and they would say, that's positive for the US dollar. No, it's not like that. So you need one to gain, you need the other one to drop, and you need the unemployment rate to drop, and you need the NFP number to gain for it to actually be good for the US labor market, okay? All right, the third set of data that's actually going to be released, it's actually the US average hourly earnings. Now, average hourly earnings, it's also released by the BLS, and it's also released alongside the unemployment rate as well as the NFP number. It measures the average hourly earnings of workers in the US economy. The data is collected through surveys of businesses across various industries and encompasses both full-time and part-time employees, including overtime earnings. Now, this is actually very important because when we take a look at the NFP numbers, there are some criteria for you to actually be included in the NFP, right? Private employment is not included in the NFP numbers. Non-profit organizations are not going to be included in that as well. But with the average hourly earnings, private companies that might not be part of the NFP number is actually going to be included in the survey. Okay, so it is very important because it actually has a much wider range or a much wider sampling size. So I think this is why it's also very important to understand how much people are actually getting paid, right? So no point if there are actually more people being employed, but they're actually getting paid less. That's not good for the labor market. What's good for the labor market is if more people are actually employed and there are going to be on a higher pay. That would be good for the labor market. Of course, that's going to cause inflation to heat up, which is something we need to talk about as well, because economists, investors, and traders would monitor this report. It would offer valuable insights into the state of the US economy and its potential impact on inflation. Now, you're wondering, why is that going to have an impact on inflation? Because average earning data, as the wage growth rate increases, right, it could actually signal a shift in the labor market and potential inflationary pressures, i.e., even if the unemployment rate drops down, even if the NFP number is not high, if people are actually getting paid more, they have more spending power, right? They have more buying power. Then they would actually, potentially, they could actually spend more. Okay, so they could be importing stuff from overseas that would actually still fall into the inflation measures. So it is very important because as you know, a lot more people are getting a increase in their wages, they could potentially spend more, and that could speed up inflation. So there's actually a link, right, on what's going on. Hold on. All right. So there's actually a link into how much people are actually earning and how inflation could actually speed up. So this is something that we need to consider as well. Now, higher than expected wage growth may indicate potential inflationary pressures, I just explained, which can result in higher interest rates and currency appreciation. This could actually boost the currency because higher inflation, i.e., might be less rate cuts, or the central bank might need to potentially hike interest rate even more. Now, conversely, lower than expected wage growth may indicate weaker inflationary pressures, which may lead to lower interest rates and currency depreciation. As with any economic report, it's important to consider the broader economic context and other indicators when trading based on the US average hourly earnings data. I'll explain for tonight what we're looking out for, okay? Now, before we go on to the calendar, I want to talk to you through some of the trading strategies. Number one, obviously, you can trade pre-NFP. So one strategy is actually to trade the market expectation for this NFP number, and the approach involves opening position in the days leading up to the NFP release, which would be anytime from Monday till today, this morning, maybe, with the expectation that the market will begin pricing in the anticipated NFP outcome. We have seen some of it being priced in. In fact, I don't think the market is kind of in a little bit of a range for us to straddle, but we'll see how it is in the next 5 minutes or so. So you basically need to close your position. You need to close your positions before the actual NFP release to avoid extreme volatility that can follow. So, i.e., for this one here, you're probably not comfortable with trading the news, so you might want to trade it before the news, but you want to have your positions closed before the NFP number is actually released. What we're going to be doing tonight is actually the straddle strategy, and this involves placing two pending orders. We will be using the stop orders. We will talk more about the pending orders on the next session, which is going to be Tuesday next week on the 11th of June. If you are curious about how to actually figure out all these pending orders, if you're new, right? But if you have attended our sessions every single month, you would be very familiar with how we actually trade the NFP numbers. And we use the straddle strategy, which is creating a stop order above and below the current market range, just before the NFP is released, and we will be placing our positions in the next 5 minutes. But yeah, this way you can actually potentially profit from a strong price movement in either direction. And once one of the orders is triggered, you need to immediately cancel the other order to avoid being exposed to further market fluctuations. Now, this is something that we're going to set up 5 minutes before the NFP is released. Now, with the NFP, there's actually a special strategy as well, which is called the fade. Now, this strategy involves waiting for the NFP release and observing the initial market reaction. And once the initial volatility subsides, you want to look for opportunities to trade against the initial move. Okay, so this is pure intraday, right? Borderline scalping the market. And for tonight, I think there might be an opportunity for us to fade. And I'm actually going to, moving on to a small time frame, which is probably something that we have rarely done during our NFP sessions, right? On our NFP sessions, usually we close out our positions within the first 5 minutes and we are done for tonight. So hopefully we're going to get some good trades today. Okay. We want to focus on some retracement levels as well, where, we might actually see where a potential reversal could happen and stuff like that. So we'll be focusing a lot more by using Fibonacci extension, and we are going to be using Fibonacci retracement, which is something that not a lot of you are probably familiar with, but we have done sessions on Fibonacci retracements, and there are actually some webinar sessions that I've actually done. If you want to search that on the Octa Broker channel for Fibonacci, there's actually some Fibonacci level webinars that's actually done. Okay, now the last one obviously is going to be post NFP trading. So you want to wait until everything calms down, maybe an hour or two after the NFP release, or maybe up until Monday before you start making a decision. You could do that as well. A lot of swing traders does that. Now, regardless of the strategy you choose, keep the following tips in mind. Manage your risk. Always use appropriate stop loss orders that have risk more than a small percentage of your trading capital on a single trade. Stay informed. Keep track of economic news forecasts, market sentiments leading up to the NFP release to make better informed trading decisions. Be prepared to adapt your strategy based on the actual NFP data and the market's reaction to it. All right, I've got about 3 minutes to talk to you about the numbers tonight. Now, the NFP numbers. The previous number is at 175,000. We are expecting a slight gain at 185,000. That's the consensus. But if you take a look at the forecast goes all the way down to 151,000. So there's actually not a lot of positive anticipation by the market that the NFP numbers could actually be good, or it could be above 200,000. So any number above 200,000 at this point in time, that would send the US dollar straight up. Okay, that would be a good surprise for the labor numbers. Judging by what we have here, right? Previously at 175,000, I'm looking at the last month's number to be revised up a little bit. That could be an upward revision. And for the consensus tonight, we might get 185. We might actually come closer to about 180,000. That's a little bit more of a realistic number, in all honesty, right? Either we're gonna get a lower number because of the revision from last month, or we could get a high number because of the revision from last month. So the number tonight, it doesn't rely on a consensus. It really relies on the previous month's revision. Now, the second part of things is the unemployment rate. Unemployment rate is expected to remain stable at 3.9%, and I expect this to be so unless there's a revision previously to 3.8, and all of a sudden this month we got 3.9. That means we actually had a weaker number. So be very careful of last month's revision. But as it is, I'm not expecting a huge surprise on the unemployment side of things. I think we should be looking at around 3.9%. Now, if the unemployment rate shoots up above 4%, market is going to start pricing in for a rate cut before September from the FOMC, because a move above 4% on the unemployment rate, that would actually be pretty dangerous for the US labor market. Okay, average hourly earnings, we're looking at either the average hourly earnings remaining stable at 0.2%, which is the previous number, or it might actually go up a little bit to 0.3%. The average hourly earnings is probably not going to have a huge impact unless it misses the consensus that we have here, maybe a gain to 0.5% or a drop to 0% growth. That would impact the market, right? But other than that, I'm not expecting the average hourly earnings to be the big player for tonight. I'm expecting the NFP numbers with the previous month's revision to be much more important. Unemployment rate at this point in time, I don't have a lot of expectation. I think the number that we get here, about 3.9 to 3.8%, within that range, that should still be okay for the US labor market. Now, what's bad for the US dollar is if the unemployment rate goes up above 4%, that would send the US dollar down. No matter what gain it is for the NFP, we might see NFP above 200,000, but if the unemployment rate hits 4%, that would send the US dollar down. All right, that means there's going to be a boost for the Euro USD and the Pound USD. All right. Okay, let's move on to our market here, and again, as I was more of anticipating on this one here, we don't have a particular range. Market has already started moving. We do have a little bit of a small range, but that's pretty much it. I'm actually going to be looking at this one here, a buy stop just above that level there, probably about 1.0905. We are actually trading a very small range here, and in terms of the sell stop, you could have it at 87, but I would much prefer to have it about 82. So yeah, about 82, 81, around 80. I think that's an okay number, but if you really want to have it a little bit higher, it's just about 2 pips in terms of difference. So this is current range for the Euro USD first, and we are placing a buy stop at 1.0905 and a sell stop at 1.0880 or 1.0882, up to you, right? The pound USD, this one here is a little bit dangerous because we don't have that corridor of volatility, which is something that we're going to explain next week. For now, we do have a sell stop, and that sell stop is going to be about 1.2780. This one here, we could create a little bit of a temporary resistance on this one here. That would actually fall about 1.0820, right? So if you want to have a buy stop, we need to look back a little bit further on the pound USD. You want to have a buy stop at about 1.2818, anything above 1.2815, right? That would be your buy stop. I would have it at 1.2820. Just in case, you know, I don't want my order to be taken and it will kind of whipsaw back. It's pretty dangerous if you consider that, right? So on the Euro USD and the Pound USD, this is going to be the range. We want to have a sell stop at 1.2780, a buy stop at 1.2820. That would be the Euro USD and the Pound USD. The dollar Japanese yen, you do not want to have a straddle on the dollar Japanese yen. The dollar Japanese yen or any yen crosses out there is a little bit more on the unique side of things. Now gold, I don't like a straddle on gold at this point in time. I would wait for the data to be released before we'll trade gold. So we are not going to create a stop orders on gold. We have about 2 minutes. Let's take a look at other market. For the Aussie USD here, you can have a buy stop at 66.82, right? 66.85 would be about right here for a buy stop. And the sell stop, it's going to be about 66.55, just about there. So about 30 pip of range there. 66.85 for a buy stop on the Aussie USD and sell stop at 66.55. Okay, the dollar Canadian, you can straddle this one here. You can have a buy stop here at about 1.3690. Right, that would be a good number there, 1.3690, and a sell stop just below 1.3660. Just about 1.3660, right? That would be the sell stop. So on average, we're looking at about 30 pip of range here on what we're placing for tonight. Numbers going to get released any moment now. I think we already have good positions on Aussie USD, Euro USD, Pound USD, Dollar Canadian. It's pretty okay. And then we'll take a look at gold as well as NASDAQ as well. NASDAQ is actually very interesting. You do want to have a buy stop on NASDAQ. Hopefully I can make it. All right. Buy stop at 190.95 or 190.100. Sell stop at 18.975. So that's basically it for NASDAQ. Okay. And gold, again, we're not straddling the gold at this point in time. All right, we got Euro USD, Pound USD buy, and the number is, all right, we need to, I think we got whipsawed on the Euro USD, and we got whipsawed on everything. So forgot to close it. Let me close the Aussie dollar and dollar Canadian first. I think we got whipsaw on the Euro USD and the Pound USD. So this one here, it's kind of stuck a little bit. All right, Nonfarm Payroll is actually a really good surprise to the upside. 272,000. Unemployment rate though, 4%. So we are going to be looking at a little bit of a confusion in the market. Nasdaq is got triggered. All right, Euro USD and the Pound USD is kind of a problem that we have here. We just got The data is not pretty. it's 272,000 on the NFP numbers, but the unemployment rate goes up to 4%. So we might actually see this potentially whipsaw a little bit here. So we'll see. We do have a strong drop. Again, for Euro USD, we're anticipating a little bit of a drop closer to 1.08, right? At that point in time, we might actually close our short position on the Euro USD, and we'll keep the buy on this one here. I got whipsawed, so I got to figure out how to get out of this. But yeah, on the Euro USD, for the sell, we are going to be looking at a potential return closer to about 1.0810. Now, a little bit of a warning here. The NFP number, although it is a huge surprise to the upside, and then the previous month was actually revised down. So there's actually a huge gain. We were looking at more than 100,000 gain on the NFP numbers, but the unemployment rate is at 4%. So we are looking at the unemployment rate picking up on for now, which is not good for the US market. So we'll see what happens here. We are looking at we got to buy and then we got to sell on the pound USD and the Euro USD. We're going to be targeting some levels. For the pound USD, we're actually going to be targeting a return towards 1.27. Right, at that point in time, we want to get out on our short for the Euro USD and the pound USD, and we will actually trade the fade on that one there. So I leave the Aussie USD. I think Aussie USD did we get whipsawed on Aussie USD? No, we're good with Aussie USD. So Aussie USD is still good. In terms of stop loss, you want to place it at about 66.85. Target level for this one here, we want to go a little bit lower, just around 65.92. So I'm looking at about 66, slightly about 66 cents. We should have a little bit of support at 66 cents. Okay. Now, dollar Canadian, this is already spiking to the upside, which is good. We are going to be targeting this one here. And for this one here, you really want your stop loss to be at about break even for the dollar Canadian. That would be enough for the dollar Canadian. NASDAQ, we'll wait for this one here. We might see this one here spike down a little bit. But the consideration here for NASDAQ is a little bit unique. Might not stay too long for NASDAQ, depending on what it is. But yeah, because if the unemployment rate goes up, it really does mean that the FOMC needs to start considering a potential rate cut because it's starting to affect the labor market here. Now, gold. We are waiting for a little bit of a bounce, right? Not time yet to go in on gold. And if you're wondering what happens with gold, there was actually a report today published by the PBOC, which is the Chinese central bank. They stopped buying gold for the first time in 18 months, and that causes that plunge in gold. Now, the PBOC has basically been buying gold since 2022, and for the first time in 18 months, the report that comes for the month of May is they did not buy any gold in the month of May. So that basically sends this crashing down. Okay. Now, I'll wait on the 5-minute time frame for gold for the potential fade. Again, for the Euro USD, I think we are pretty much good on that one there, but let's monitor on the 5-minute time frame. Again, any short, quick bounces on the 5-minute time frame would actually indicate a potential fade in the market. Now, this would have been a positive trade. It's just that we got whipsawed on the Euro USD. So you'll notice here on the list of order, we got a buy stop on the Euro USD and a pound USD, and we also have the sell stop triggered on the Euro USD and a pound USD as well. So that kind of gaps up everything. Okay. All right. So Euro USD and pound USD, I'm not really too concerned on this one here. We have our projected targets for this one. Once it reaches those targets, those are going to be critical support level, especially on the Euro USD and the pound USD. We might see some profit taking closer to 1.08, and we basically need to test if 1.08 is actually an area where a lot of traders are going to be looking to buy back in on the Euro USD and the pound USD, and we will do so if price reaches 1.08. Okay, so I'm anticipating a little bit of a turnaround around this level there. Aussie USD again, same thing. We're looking at a potential move lower towards 66 cents. For the Aussie USD, stop loss for the Aussie USD here. Right now it is a little bit far, and we're not given a 1-to-1 risk reward ratio. I think this one here, we did see price jump down very quickly. So do keep in mind such volatility could actually happen in the market as well. All right, so it might look like it's a negative. It's just that we got whipsaw here, which is bad. But we'll see what happens. We're not going to be closing out that position for now. we want to see if price bounces off 1.08. Now, just in case, if it does bounce off 1.08, I'm going to have a little bit of a stop loss there for our buy position, pretty much at about 1.0785 for the Euro USD buy that we have, because I'm not anticipating a drop below 1.08. Pound USD at the same time as well, we're not anticipating a huge drop below 1.27, so any stop losses below 1.27 is actually good. All right, so yeah, dollar Canadian, I think we can gain a little bit more on dollar Canadian. Let's see what happens here. Yeah, take profit level is just about right for dollar Canadian at this point in time. We could go a little bit higher here. I don't think it's worth it at this point in time. I'm pretty happy with the high that we have on the dollar Canadian. All right, Nasdaq, we'll leave that trade. Gold, I'm waiting for a bounce, right? I'm waiting to see if 1.23 is actually going to hold. So if 1.23 holds, we might actually be looking for a potential bounce around 1.23. So we are just anticipating if that level holds there. I already have a line there, 2,300. This is going to be the level where we anticipate potential buyback in gold. But, you know, as it is, I'm not taking a position in gold as of yet. But we'll see how it is, okay? All right, everything is going good. I think we're starting to balance out a few of the stuff here. Euro USD and Pound USD we've saw it, but that's okay. We'll manage that. It's part of everyday trading. But other than that, dollar Canadian, Aussie USD, it's pretty much on track as it is. Okay. Okay, Aussie USD could have been more. Got in on 0.5 instead of 1 on Aussie USD, which is probably not good balance there, but it is what it is. All right, we're looking at this. I'm waiting for a potential fade. Let me look at any chat. Chat's been quiet here. Hello from Abu Dhabi, and hello to you too. Thanks for your support. Really appreciate it. Can we see wicks in this NFE? I think we just saw wicks on the small time frame. All right. So yeah, no questions so far, no requests or anything like that, but this is going to be the main focus on the Euro USD and Pound USD. We want to be looking for that move lower. Now, are there going to be wicks? I think just a little bit of a snap to the upside. So let me talk about the unemployment rate here. It is a huge surprise, but let me break down the other average hourly earnings data. It is also above consensus at 0.4%, an increase from 0.2%. So we got NFP going up. We have average hourly earnings going up as well, but the unemployment rate does pick up as well. So we actually do have a little bit of a mixed data. I want to see what the market is, considering, right? I want everything to settle down. Once the initial reaction happens, the initial euphoria in the market happens, I want to see the reaction to them realizing the unemployment rate has actually gone up to 4%. So this could go either way. This could actually be a little bit of a boost for the US dollar. But if you take a look at the drop in the Euro USD and Pound USD, at this point in time, everyone's just focused on the NFP numbers. They are not really realizing on the unemployment rate, on how important it is. Okay, but yeah. Nasdaq could react differently to that thought though, because if unemployment rate goes up, the stock market is probably going to love it, because they would say, oh, the Fed is probably going to have to start cutting rates earlier, right? So this is probably something that they would anticipate. That would actually be a little bit of a boost for the stock market. But we'll talk more about Nasdaq, because there's going to be a stock split for Nvidia on Monday. Nasdaq is going to behave a little bit differently for today and up until Monday next week. All right, will the data have any influence to the Fed rate decision? At this point in time, no. I don't think there's actually going to be an early rate cut, but Fed would mention the 4% unemployment rate. That would actually bring it up. So we'll see with this month if they're actually going to bring it up. I don't expect a rate cut from the FOMC this month, not just from this data, right? But the FOMC would probably mention that the unemployment rate has gone up to, I think dollar CAD is close. Yeah, dollar CAD is close. Yeah, the FOMC might talk a little bit about the 4%. They might say, if the labor market, if the unemployment rate continues to go up about 4% and it continues to increase at a faster pace than an inflationary drop, then they might start cutting interest rate just for the sake of keeping the economy afloat, right? Because unemployment rate that goes up too quickly, that goes against their mandate as well. They need to protect the labor market as well. So, it really depends. But this is a step in the right direction to nudge for a potential rate cut from the FOMC. And considering globally all the other central banks have already started cutting interest rates, it'll be interesting to see how it is, okay? All right. No fade yet. I don't think we have any fade. At least on the 5-minute time frame, we're not looking at any buying momentum on a 5-minute time frame. I think this is still pretty much in one direction. For gold, especially, you do not want to just say, "All right, it's dropped down significantly. Let's just buy in." We need to have a much more. We need a stronger confirmation in terms of demand for gold here. We just can't say, "Oh, it's gone down a lot today. It's time for us to buy back in on gold." We do have a little bit of support here, but you have to keep in mind, what is 2315? It doesn't mean anything. If you look at it on the early time frame, it might be a level this week where a price just bounces off, but it holds nothing in terms of significance. Closer to 2,300 to 2,310, that would actually be the more appropriate range for a potential bounce for gold. So if you are into gold, you really want to wait a little bit here. Don't rush into gold, all right? Really don't want to rush into gold at this point in time, okay? Maybe I'll look for potential buy level for pound. Buy level for pound, yeah, I'm looking for that. But for now, we are looking at a little bit of a push lower. Now, if we go by what we have here, right, at least on an hourly time frame, we do have a little bit of an extension to the downside here. Now, let me change that. I don't think I've already included 1.272. Let me just add this here. Okay, and 0.786, 78.6. Okay, so if we were to add this, a potential exit on a short should actually be at about the 161.8%, which is about 1.2725. We might actually need to adjust our stop loss for this one here to just about there, just in case. Same thing with the Euro USD. We can actually start measuring this once it reaches its extension. Well, this one here is actually a little bit lower. Yeah, we'll see. We'll take it from this one here because I think we are a little bit more on to the downside. And let's shoot right. There we go. Okay, so we are about 100% here. In terms of projected return, we are looking at a move towards 1.08. So take profit as at about 1.0810, right? I will leave it at that. So if you're thinking of picking the Euro USD and the Pound USD for a potential fade, I would look at it at a lower level, right? It's either at 1.27 or 1.2725 on Pound USD. But you would need to wait for at least on 5 minutes time frame to kind of create a little bit of a bullish candle. That's how we actually identify the fade in the market. If we don't have that, we're not going to be able to fade this as it is, because it's still dropping like a hot knife through butter. So it's very hard for us to close out our positions. We might be able to kind of close out the Euro USD and the Pound USD hedge that we have here. It is still positive, and that's basically on the back of the drop in Nasdaq. In terms of Nasdaq, I think in terms of stop losses, we could have it at 19,090. And for target for Nasdaq, we are looking at a little bit of a correction, and we are in this cycle as it is. So our projections, we might be happy at about 38.2, but I'm looking at closer to about 1880. 1880 is not a good number. About 1875, which is about 50%, right? Should we get a 50% correction on Nasdaq? We could potentially get that. So yeah, about 18,800 would be about the right take profit target for Nasdaq. Okay, stop loss on Nasdaq is already in place, 19,090. Euro USD and Pound USD, let this one drop. I'm still not getting any indication of a potential buyback on any of this. I think it's approaching our target levels for the Aussie USD, Euro USD, and the Pound USD. Dollar Canadian is out. Nasdaq still on progress. For gold, I want to see a little bit of a move lower. Right, I want to see a move that goes closer to 2,300. We anticipate a potential buyback around that level, but we're not getting that confirmation yet. Okay, so don't jump in on gold yet. There's no rush for you guys to do that. Okay. All right, what's going on with gold? Gold's now in downtrend, so or it's only play with us. No, there's no. It would be a shock, but I don't think it's actually in a downtrend as of yet. It's still above 2,300. For it to actually start a downtrend, it needs to drop below 2,200. Right? As I said, the drop in gold for today was there's a report from PBOC that the central bank, Chinese central bank, did not buy any gold in the month of May. So they're not adding into their gold reserve. Now, this is unique, right? Because what's pushing gold prices up initially was actually China purchasing gold as part of their reserve. And that's basically what's driving gold to the upside, right? We see all new time high because all central banks are buying gold. And China, for the first time in 18 months since 2022, they didn't buy any gold reserve in the month of May. That report comes out and you see that drop in gold. Okay, so you obviously need to be aware of what's going on, what could affect gold prices in the market. So it's actually not a surprise. In all honesty, I don't think it is a surprise. If you don't know the fundamentals behind it, it would be a surprise to a lot of traders, right? Would it shift that into a downtrend? It wouldn't shift it into a downtrend because for gold, as I mentioned in the outlook that we posted on Monday, there's a lot of support for gold. So let me bring it up. You have this much of a support for gold. Right, it needs to clear 2,200 for it to actually be considered a downtrend for gold. So yeah, price could bounce off anywhere. Right now we're looking at support at 2,300. Can it slip down even more? It could go down to 2,275, and that would still be okay. That would still be part of support 3 on a weekly pivot, and that would be okay. It's still going to be inside the Ichimoku cloud. We have a thick Ichimoku cloud. I'm not looking at any transition to the downside for gold at this point in time. Now, for the Euro USD and the Pound USD, the reason why we're looking at the return towards 1.08, this on the Euro USD at 1.08, that was the previous liquidity level. We're looking at that as a potential bounce. That's where the support one on the weekly pivot is located. That's the lower end of the range, right? We're still range bound between 1.08 and 1.09. Even with this kind of data, we're actually still within range. It's still the support where the Ichimoku cloud is located. So I'm looking at a potential turnaround around 1.08. We might actually see that today. And for the Pound USD, we're looking at 1.27 right now as a potential support. But can it go lower? For the Pound USD, it could. It could actually push down lower to 1.26. And we'll still be okay. We will still consider this as a technical correction rather than anything else. Okay? So are we going to get a turnaround completely in one day today? We might not. Looking at the current push lower, I don't think everyone is actually factoring in that higher unemployment rate. But come next week, they might change the story, especially if we have a drop in the inflation number. That could actually push the US dollar lower. So don't be trigger happy, right? It's Friday, it's NFP, not a big deal. Wednesday, the inflation number is going to get released. That's going to be the deciding factor in terms of the long-term US dollar strength. Right now, we're not looking at a significant boost or anything like that. This is the dollar index. We're just bouncing off that 104. We're still capped by 104.50 for today. We're still within we still have a lot of resistance on the dollar index. You know, come next week, if we push higher towards 105. It might fail at 105, and on the flip side, the pound USD might actually pull back for a correction, right? It could actually be ripe for a push higher on the pound USD. So we might anticipate that kind of potential outcome, right? Even for the Euro USD, might not have enough strength to break 1.09, but if it bounces off 1.08, we might be able to break 1.09. So we're selling euro, we're selling pound, but we're looking at potentially buying back closer to 1.08, or any changes or any fate that we might get before our trading sessions for today ends. Right, we're looking at a little bit of a recovery here. Price is bouncing off 1.0825 on the pound USD. It didn't close my trade. Okay, that's very interesting. I think that's probably because of the spread, but price definitely touches that level at 1.2725 there, exactly at 161.8%. I'm just wondering why it's not closing out my trade here, but it's okay. We'll leave it there. We don't have a strong indication as of yet, unless we might actually start buying this if price pulls back a little bit higher. So on the pound USD, we have our sell here at 1.2754, right? I think, oh, I got filled in pretty low. Right, it should be up there in terms of where I got filled in. Okay, I think I got dragged down a lot on this one here. Right, okay, about 10-15 pips, I guess. But yeah, we should actually be out from the pound USD. This should have triggered the take profit level on pound USD. I'm just curious of what it is. But yeah, the Euro USD, it is what it is. In terms of stop loss for that sell on the pound USD and the Euro USD, I would actually move it to break even. If it does hit our trade at break even, I would actually buy the fade on that one. I would actually buy the pound USD and the Euro USD, but we'll leave it at break even for now. All right, same thing with the Aussie USD. Want to have our stop loss at break even, or if you want to lock in some profits, that's completely fine. I would actually lock in some profits for this one here, about 66.25, better than nothing. All right, NASDAQ, it's obviously something that we need to talk about as well. I'm holding on this one for now, but we already have our stop loss in place for NASDAQ. This one here is probably going to get a lot more volatile for tonight, especially as everyone's preparing for Monday's NVIDIA split. That's going to create a lot of movement in NASDAQ. So if you're looking for trade opportunities, I would focus a lot on NASDAQ, especially on Monday. All right, come Monday, I think there should be a lot of focus on that. So we put buy limit orders now, or what do you recommend us to do? I wouldn't put a limit order as of yet. You can try a small limit order if you want to. For Euro USD, you can have that limit order about not at, you would probably want to have it at 1.0805. There's a lot of orders right now in place here. But yeah, you can have it at 1.0805 for your limit order. So I'm going to put it up here. You want to go for 1.0805, but you need to have a stop loss, and this stop loss is going to be at 1.0775, nothing more. And for your take profit level, you want to go for 1.09. This is going to give you a good risk reward ratio. So this is a buy limit order. Okay, this is a buy limit order for the Euro USD. You can have that order at 1.0805. Your stop loss is going to be at 1.0775. Take profit is going to be at 1.09. However, we already moved our stop loss to break even for our short trades, right? If it hits our break even point, you actually want to buy in on the Euro USD. That's when you want to start fading the Euro USD, targeting 1.09. Okay, same thing with the pound USD. Okay, pound USD, I think this can go a little bit lower than what it is. Okay, we're looking at 1.27. I would go for a little bit of buy limit at 1.27. Okay, so buy limit at 1.27. Again, stop loss not more than 30 pips, right? So 1.2670. and your take profit is going to be at 1.28. This is a good risk reward ratio. I think we are okay with that. Now, Aussie USD, I will leave this alone. I don't like how it is right now. We're just not getting enough momentum as it is. Nasdaq still progressing to the downside. Dollar Canadian, I'm not touching Dollar Canadian as it is. Gold, should you create a buy limit on gold? No, do not do this on gold. Okay, we don't know the reaction for gold as of yet. The PBOC report came in a little bit late. That was at the end of the Asian session. I think the European and the European session was, I think, when the report was actually released. So we saw that initial reaction. The US market hasn't kicked in yet. We do not know what the reaction is for gold during the US session. So I'm not in a rush to buy gold. If we have a significant bounce on gold, i.e. if gold comes in and go above that level there, then you can buy gold, right? About 2,340, you can buy gold. So i.e. you might want to have a buy stop at about 2,341. That's an okay trade for gold, because for gold to reverse and potentially gain, it will need to go above 2,340 tonight. This is on a 5 minutes time frame. If I were to scale out on the 15 minutes time frame, you'll notice that would be about right, because that's where price kind of failed just now before it drops even lower post news. So either at 2,300 or anywhere above 2,400, that will be an okay level to buy in on gold. But I'm not going for the buy limit. I would prefer for the market to give me that indication that there's actually demand for gold. Otherwise, I'm not touching it. Okay. So, yeah, again, let's summarize what we talked about. There are going to be three main strategies for traders to use to trade the news. Strategy based on 2 pending orders. That's what we did today. Trading before the data is released. You could do that for next month if you want to. We just gave some indication to trade after the data is released. We just processed the data. We're looking at some opportunities tonight, whether or not we can actually fade the market. There are going to be 2 trades that you want to be focused on, which is the Euro USD and the Pound USD. Gold, be very mindful on gold. I don't think you need to rush in on gold. And a lot of you guys that are new to trading, for some reason you like to trade gold. There's a high volatility on gold, and it is in a different category as of today. The importance of the PBOC not buying any gold reserve in the month of May is very significant, because if they stop buying gold as a reserve, then gold prices in the long run could actually go down, especially if the FOMC refuse to cut interest rates. Okay, be mindful of that. All right. So here's the code again. It's Nonfarm 2024. So make sure you are using this code when depositing into your Octa trading account. This is still valid until the 31st of December to double your deposit bonus. And any questions so far? I think we already answered some of the questions just now, but just in case, if you're wondering and you still have any questions, we still have a few minutes here, maybe about 1 or 2 minutes. But what's next? On Tuesday next week, which is on the 11th of June, we are going to be covering the theory and practice for news trading. So if you're new, you watch this video and you're wondering, what is this guy doing? What about the limit orders and stop orders? You don't know what it is. I don't know much about news trading. We'll talk more about the risk, the potential benefit for news trading, right? Some of the strategies there, some of the criteria on what we're looking at for news trading. So advantages and disadvantages of news trading, most profitable news for trading. We'll take a look at some of the price action there. We'll talk more about the buy stop, sell stop, the buy limit and sell limit strategy as well. Okay, so that's going to be next Tuesday on the 11th of June. And then you're going to have the CPI on Wednesday. So yeah, let's get prepared for that CPI on Wednesday. So if you are wondering, you come across this video a little bit late, over the weekend, you watch this video and you think this is, okay, very interesting, jump in next week for news trading session, theory and practice. We'll cover that on Tuesday. Okay. All right, guys. So all trade plans has been laid out. We're not looking at any fates as of yet. This is still pushing to the downside. But yeah, we'll see what it is. Aussie USD is still pushing to the downside. Nasdaq pushing to the downside. Gold still pushing to the downside. Do not fade the market as of yet. Okay. So be mindful of that. The US market is not kicked in yet. It should kick in. It's already open, yeah. So yeah, we'll see what it is, okay? Alright then, good luck with your trades. And I'll see you guys next week on Tuesday. Don't forget we have that news theory and practice, which is session number 2 for our news trading session. Have a fantastic weekend, and I'll see you next week.